Hello and welcome to Behind the Scenes podcast for Out of Frame. I'm your host, Sean Malone, creative director for the Foundation for Economic Education and the creator and host of Out of Frame on YouTube. Here today for the first time in quite a while, Jen Maffasanti back with us from Utah, and of course Paul Nelson, our Out of Frame Shorts editor and Fees social media director. How are you guys doing?
I'm doing fantastic. I am so happy to be in Utah. It is kind of the best. No complaints.
So for those who have followed the show or have been paying attention, Jen, at the end of last year, I think your last episode probably was our holiday episode, right? And then started moving to Utah. And that's been kind of an ordeal. How was your trip? I know you guys drove over there. Also, for those who don't know, Jen's husband has race cars, and that's a whole ordeal traveling that across the country. How'd it go?
It went as smoothly as could be reasonably expected. We got really, really fortunate with the weather. So it was clear and sunny for most of the time. We did catch a few brief rain showers, but nothing significant. It did take us like 7 days to make the drive from Atlanta to.
That sounds longer than planned, right? Like, weren't you going to do like 5 or something, and then?
Originally, yes, but the movers arrived at my house in Atlanta on Monday, and they were not going to be arriving at the house in Utah until following Monday. So we had a whole week where we were just going to be staying in hotel rooms anyway. So we decided to stretch the drive out a little bit longer so that, each individual driving day wasn't going to be so bad as we had been anticipating. We did still have one 10-hour day when you include all the stops. And that was from Little Rock, Arkansas to Amarillo, Texas, which is a real boring drive, by the way. There's not really anything between the two places.
That is an incredibly boring drive. It's comparably, Jen, the drive from Los Angeles to Amarillo is also extremely boring. So you're, Amarillo's cute though. Like I don't know what I expected. Like, having been to Amarillo, to me, it like the name always made me think of like an Old West kind of town. And it's actually a lot more like Lincoln, Nebraska, where I grew up. It's like actually a pretty boring town. It's like, I was like kind of looking forward to like, ooh, Amarillo. There's just going to be boots and spurs and like, it's going to be very cowboy. But no, it's just strip malls and parking lots and just, normal.
I mean, you're not wrong. You're not wrong. But I will say that in Amarillo, Texas, we had one of the best meals that we had the entire trip. Nice. We managed to stop at the Big Texan Steakhouse and had steak. And it was high quality. It's like I'm sorry?
Did you get the 72 ouncer?
No, we did not. For those who don't know, they have a 72 ounce steak challenge, and if you can consume it all within an hour, then you get it for free. And they have timers and everything. They're very, very official. It's such a kitschy restaurant. What
cut of meat?
Look, we thought it was going to be a tourist trap.
Like what even?
It's
that be like multiple ribs worth of? What are we talking about here?
I think it's ribeye, isn't it?
That would be nuts.
It's either a ribeye or it's T-bone.
Yeah.
But it's we didn't look at it too much. We were like, no.
Yeah.
We have to.
Well, and also I got to imagine you're not allowed. Are you allowed to share? Can a whole it's got to be one person, right? Like who tackles it. Oh no, that'd be horrible. I remember when I was in high school. I think we were on like a jazz band trip or a marching band trip or something. Like we stopped at a steakhouse on our way back, and a buddy of mine consumed I think just like a 24-ounce steak, and that made him throw up. So the idea of 72 just seems like really, really horrifying. Like I'm not really sure why. But hey, here's an opportunity to say, by the way, thank you to capitalism for this, because now this may be a black eye on capitalism's face in some ways, but also the fact that we can sit around and make challenges out of eating way too much food as opposed to starving to death and worrying about where the next the next little bit of protein is coming from. That speaks well to our society. Also, it's kind of horrifying at the same time.
Yeah, and not just any food either. These are like high quality cuts of beef.
Yeah. I mean, this is top tier. I mean, this is the protein you would select if you had any range of options, right? But oof, man.
Yeah. But I will say, after Amarillo.
Oh yeah, go on, Jen. Sorry.
Oh, after Amarillo, the drive became a lot more interesting, visually anyway. You're still just on I-40 headed west. And like coming into and out of Albuquerque was amazing. The drive between Las Vegas and St. George, Utah was probably one of like my top 5 favorite drives that I've ever made at this point.
Yeah.
And we got to stop at the Hoover Dam.
Oh, that's cool.
Did you take the dam tour?
The dam tour was not running.
The dam tour was closed?
So we took our own dam tour.
Oh, man. Did you stop to appreciate how only a nation could build this dam? I don't know if anybody even gets that reference at this point, but Rachel Maddow wants you to know that you're, no individual or even private citizen could ever build such a magnificent thing as the Hoover Dam. It takes a nation to do something that scale. Just so you know.
I mean, it is super impressive and it's beautiful, but I did spend a lot of quality time going, this was such a waste of money for a make work project that nobody asked for. Like, and people died doing this.
A lot of people died doing it. A lot of wildlife has since died as a result of the Hoover Dam. There's a lot of things that are kind of amusing to me whenever I see people do the like, oh, well, without government we couldn't build this, like, insert make work project here. And then I always think like, yeah, but that's not a good thing. Like, that's not, I don't know if you really realize that this isn't necessarily the best, especially in a context like that where you're basically like you're walling off a whole bunch of fresh water from lower elevations, and then you're making a lot of power, which is nice, but like there's other ways to do that, and or also maybe you don't need to live right in that area. I mean, there's moral hazard and kind of those kinds of issues as well. But like, yeah, whatever. Live in a desert. Have the state pay for it. It's all good.
At least I got to be in 2 places at once. In the middle of the dam. Like I had 1 foot in Arizona and 1 foot in Nevada, and I was in 2 places at once.
You know what? And that is one thing I think we can unequivocally say, without government, that wouldn't happen.
Facts.
Yeah. There you go. Paul, how was your weekend?
My weekend was good. The housework continues. We are bringing in some furniture this afternoon. The room behind me is a little bit of a mess right now, We're going to be having a nice couch delivered just in time for the Super Bowl. And sorry, guys, I'm going to talk a little bit about some sports right now, so bear with me. But I am a Kansas City Chiefs fan. Been that my entire life. And if you don't know, they play the Tampa Bay Buccaneers this weekend in the Super Bowl, second year in a row. And I appreciate your thoughts and prayers, just for my sanity and my wife's and my family's sanity. The talks were happening about having a party, a get together of sorts, and I was very upfront saying, don't count on me for anything. I will be very unreliable this Sunday. I will be in my feelings. So it should be fun. I still don't know how to react as a Chiefs fan about continued success. It's been my entire life has just been disappointment after disappointment and just kind of waiting for the inevitable shoe to drop. And the last two seasons have been amazing. And I so appreciate them, but I don't know. It's weird. I feel like I feel like Ricky Bobby after he, what do I do with my hands when he's getting interviewed at the beginning of the movie? I just don't know what to do.
A good buddy of mine, you may appreciate this because, if you feel like you don't know what to do and don't really understand how to deal with surprising success. I have a buddy who's been a lifelong Buffalo Bills fan. And that has been an interesting year for him. Now, I don't think it went quite the direction he was really hoping for, but I think the fact that they made it as far as they did was a shock to everyone involved. So, you could be doing a little worse, I feel like.
I'm sure he broke some tables, Bills Mafia doing their thing. But yeah, I'm just hoping. I'm praying for the Atlanta, Georgia weather to turn into spring Georgia weather this Sunday, so I can throw some ribs on the smoker and get some Kansas City style barbecue going. But I don't think it's going to happen. So I'll be firmly ensconced on my new couch, reclined in comfort.
Well,
trying to be relaxed.
It's not a bad thing. So I didn't really tease this up front, but I got a couple little bits of housekeeping before we get to our core issue for today. One, they're just for patrons and subscribe star fans of the show, supporters of the show. Just FYI, we are not doing a bonus episode today. We will Paul and I at least will be back in studio. I mean, Jen will be with us in studio as well, but in sort of robot form, I think next week. But we'll be back in a little bit more of a normal situation next week, and so we'll get back to our kind of regularly scheduled programming then. I think next week we're going to talk about Mythic Quest. I think next week. I feel like that's right. In any case, I'm looking forward to getting back into the studio. My family's sort of like whole COVID situation is over and more or less done with. We've got other stuff going on right now, but nothing that will prevent me from actually leaving the house and getting into the studio. So that's going to be good. And today though we want to talk about Stonks. This is
Stonks.
It's been a weird moment in time. 2021 has opened just about as strangely as I think the entirety of 2020 happened to be. And I don't know why anybody would have expected anything really significant to change, but like that whole sort of annual demarcation doesn't seem to have meant much of anything, as it normally doesn't. But if you're Neil deGrasse Tyson, you would remind me that it's just an arbitrary day on the calendar. But honestly, I think we all felt like hopefully 2021 would take a turn for the more normal at least. And this whole GameStop situation has not proven to be that, to say the least. But let's get into this, because I think this is what is kind of on everybody's mind, and also as the Foundation for Economic Education, I think we've got a few things to say on the subject of the the financial and economic impact of what's going on here. But first, Paul, I'm going to kick it to you to explain the Stonks situation.
Well, this is my wheelhouse. I guess I'm the financial expert on the show.
Sure.
Yeah.
We'll say yes.
Been meaning to tell you guys this, but this is my last day at FEE. Doge to the moon. No, I'm just joking. But so how I understand it, and guys, this is, before I begin, this is not my expertise. This is I'm as lost as a lot of people, but basically from what I understand, the hedge funds got caught with their hand in the cookie jar by some Redditors, and some Redditors using some new technology forced them to lose billions of dollars, and then shenanigans ensued. Robinhood halted trading for GameStop, and basically allowed the hedge funds to sell off and in ways that are legal, but there's questions and connections that don't leave a very good taste in your mouth. And what I think is interesting is that we live in a time and age where everything is being disrupted. I mean, the newspapers have been disrupted for nearly 20 years now, maybe 15 years. TV, movies, but Wall Street always kind of seemed like it wouldn't be. But this is I feel like this is a huge turning point in how we talk about money, and hopefully it could be used as a good thing, and show why cronyism, if that's what this turns into, is what's happening, and not, this isn't capitalism's fault. So that's what's interesting to me, is this disruption and this technology that Robinhood did champion and has now kind of thrown on its face.
So let's back up a little bit, because I think there are a couple sort of like maybe some groundwork we need to handle first, because first of all, I don't know if everybody understands what Robinhood is, or what short selling is for that matter. So let's start with Robinhood. Robinhood is it's a platform. I don't know how long it's existed, but it's existed for several years. I remember when it first started coming out, but it was in the sort of vein of a lot of like E-Trade and stuff like that, which its sole purpose, really, as I always understood it, was to make stock in investing, trading, something that was accessible to everyday average folks. So you didn't have to be what you call a sophisticated investor, somebody who has has a brokerage license or something else like that with the SEC, and has a lot of these special abilities to trade, things like derivatives, or to engage in kind of more heavily regulated trade, stuff like that. But with software like Robinhood, you or me or anybody could just, as a retail investor, we could buy Apple stock, or in this case, GameStop, right? Like we could just buy some GameStop if we wanted to. And that was something that really, to Paul's point about disruption, it's something that has not been accessible to anybody. Historically, you'd have to go through a stock broker who was, again, licensed by the SEC and everybody else to make trades on your behalf. And that comes with a lot of fees, and it's expensive, and it's hard to do, and it's confusing, and and you're really at the mercy of Wall Street, basically, or some kind of bank, in order to get into that game. But with something like Robinhood, it was meant to be a tool for average everyday folks to get into this kind of stuff, and that's what people were doing. That's what people were using it for. So getting back to the overall thing with short selling is kind of an interesting thing anyway. Like there's a lot of people, and I think a lot of people were involved in the GameStop run. I think, I don't, you guys are going to have to help me kind of figure out whether or not I have this part right. But I get the sense anyway that through Reddit and some of these message boards, people actually just don't like some people anyway who are participating in all of this just don't like short selling, or they think that there's something wrong with short selling. But there's actually nothing really wrong with short selling. It's just that short selling is it's kind of inherently negative, or at least it's got kind of an inherently negative vibe to it, right? So you're, basically a short sale is something where you are, if you're a hedge fund, for example, you are borrowing stocks with the hope, essentially, that the value of that stock goes down over time, so that when you return the stock at, for a lower price, you can pocket the difference, right? So let's say you borrowed $100 a share, but then when you have to return it, it's only worth $75 a share, $25 difference. You get to keep that, right? This is a very, very basic way of looking at that. But the point is, though, like in this case, Melvin Capital, and I'm sure a bunch of other firms, were betting that GameStop stock was going to continue to drop and, basically fall to nothing over time, which is not a horrible bet if you think about it, because GameStop is kind of, speaking of things that have been disrupted and are outmoded and really don't, you expect GameStop to maybe not be around a lot longer in any case. So they're expecting that GameStop stock continues to drop, but then a bunch of Redditors show up and decide they're going to start buying a lot of GameStop, and that boosts the price up. And the problem with short selling, it's actually, again, it's not really a problem. It's just that a cost of short selling is that you've got essentially unlimited risk if you're wrong. So the way that I heard this explained the other day is that, like, if you're taking what's called like a long position, if you invest in a company and let's say you put in $10,000 in a particular stock. Let's use GameStop, for example. You put in $10,000 in a particular stock and you have a long position. You're expecting that stock will go up over time, and you have sort of unlimited upside, but you can only lose a maximum. Like if the stock drops to zero, you lose your $10,000. You'll never lose more than $10,000, right? The problem with short selling is that it inverts this, and it says, like, if you're wrong about your bet and the value of the stock goes up instead of down, theoretically, it can infinitely go up, right? People can keep valuing it more and more and more. But because you borrowed that stock to begin with, you're on the hook for that. You've got to pay that back no matter what the increase is. And so, basically Melvin Capital took a big, big risk, and that risk did not pay off because of the Redditors.
And this is what's called the short squeeze.
Right.
So when a stock has been shorted, but then the price begins to rise instead of drop, and more people get excited, start buying this stock because they see it going up, and the value continues to increase. The people who shorted the stock originally are kind of forced to buy into the stock themselves in order to mitigate their losses. And that also puts additional upward pressure on the stock. So it's almost I wouldn't call it a perpetual motion machine, but it does compound very quickly. That is what.
Yeah, I think we lost Jen. At least I did for a second, but that's exactly what's going on with Melvin and with some of these other hedge funds that were shorting GameStop. Now, to me, and this is where we really want to talk about this, I think, to me, I don't see anything wrong with any of this in terms of the legality, but the reality is that, like, if you're Melvin Capital, you took a big bet that had a clear upside. Like it's clear to me why you would have bet against GameStop. It makes sense. But the reality is, like, it's still fundamentally a risk. Like you were assuming something would happen that was not guaranteed to happen, right? And the whole point of, and I think this is a point that gets lost a lot of times when people talk about markets and capitalism and stuff like that, is that it's profits and losses, right? Like it's not like you can't have unlimited profits and and then still never take any losses if your bets don't pay off. Like that's not how this is supposed to work. So with Melvin, I kind of look at it and go, yeah, you took a big risk, and you did not expect Reddit to be the reason that your risk didn't pay off. But that's them's the breaks, like that's the deal, right? Like you took the risk and it didn't go your way. Now you've got to pay for it, right? And that's kind of how I look at it. But of course, Robinhood kind of changed the rules on people, on the retail investors, by stopping. And this is where it gets crazy to me. They stopped not just all trades of GameStop, they stopped purchases of GameStop. So retail investors could sell, they couldn't buy more, which is like basically just saying anybody who took a short position, we're going to cut your losses right here. And, like right at this point, and then everybody will start selling off, and your short losses, like they're going to take a lot of losses no matter what. But like, it just feels like Robinhood made a decision to favor the Melvin Capitals of the world, right? And not the retail investors who are benefiting currently from this, right? They're profiting right now.
And Robinhood tried to explain themselves over the weekend about why they halted trading. And their reasoning was that when you click buy or sell in the Robinhood application, that sale isn't actually, or purchase isn't actually settled until like a couple of days later. And in the meantime, they are covering those costs. And there was such a volume going on that they were concerned that they weren't going to be able to cover all of the costs associated with all of the buying and selling that was happening on their app. So that's what they're saying is the reason for halting trading.
Yeah. They didn't start with that reason. Their first PR nightmare bungle was they were doing it to protect their customers. And it wasn't until the weekend that they came with this very probably plausible explanation. So, I mean, if they would have just came out and said, we don't have the money to support this is just a wild, crazy situation. Okay. Yeah. I think people would have understood that. But what they said at the beginning, which is, oh, we're doing it for you. It just obviously wasn't the case. And this is also a segment that this has always been pushback for allowing more people to get in. For a long time before Robinhood, you had to have something like $25,000 in an account to day trade. And it was to protect people because they didn't know what they were doing. So it's been a long ongoing saying is all these regulations and safeguards, quote unquote safeguards, are to protect the consumer. When in reality we see that they don't need it.
Yeah, I mean, I think what's also weird about this too, and I think it's worth pointing out, is that what is it? Citadel Capital is actually, I got to step back a little bit. Part of how Robinhood makes its money, apart from fees and stuff, is by selling data to big Wall Street firms. One of whom, one of their biggest clients is Citadel. And so, what Citadel gets out of this is that they get to see what retail investors are doing, and they get to see what where kind of they get a large data set of what people's interests are basically in trading, which companies people think are good or bad or whatever. And that's great. Like all this stuff is actually good for the market in general because it's helping us identify reality in prices better. And this is something that gets lost all the time in all these discussions. Like the stock market seems like confusing and terrible and whatever, but it serves a valuable purpose in especially a large scale market economy, because we don't know what every company is worth. We don't know, what to expect in the future and things like that. And so what stock trading typically does, or a lot of aspects of stock trading do, is help us identify, is Apple worth X or Y? Is Google worth X? Or like what is the balance of, this company versus that company? All of those things are kind of revealed by this trading process. Well, companies like Citadel want to get more access to that kind of information. Robinhood has that, more of that kind of information from their users, so they pay them for aggregated user data, right? And, we can talk about data privacy and all that kind of stuff, whatever. But the reality is, like, the thing that makes people annoyed about this and just thinking it's kind of shady is that Citadel is a big client of Robinhood's, also happens to have a large ownership stake in Melvin Capital. So there's a financial connection directly, pretty directly from Robinhood right to Melvin. So it's also got this like conspiratorial angle too, where it's like their excuses like don't totally make sense. And then also what would make sense is they're trying to protect one of their clients, right? And that's, again, like we get into some really weird territory there. But
yeah, but I mean, all of those big financial institutions are all pretty incestuous, really. They're all connected to each other in some way or the other, which is, to my mind, is why we need, more diversity in fintech. And I think we'll get there, but right now, they're all just kissing cousins. So
yeah, but it's also, I think, I feel like, one of these things where, the more we have an extremely regulated financial system, and we have for decades, really a century. And it's funny because it's one of those things, I talk to people about this kind of stuff all the time, and people always assume that like Wall Street is just wildly unregulated. It's, the Wild West and that kind of stuff. It's not. It's anything but, right? Like there are a ton of different regulatory agencies that play a role. There are thousands of pages of not only civil but also criminal penalties and law statutes for dealing with financial transactions. Like the U.S. Treasury is heavily involved in all of these things. Like it's really not that private in a lot of ways. And it certainly doesn't fit the same kind of model as you would think of in almost any other kind of market, right? Like if I want to go, buy a toothbrush or something, it is, there are very few steps in between, right? And there are very few regulatory steps, especially in between, in comparison. And those that are there are, like maybe physical health and safety or something like that. It's not the same as like if I want to go become a shareholder of a company, right? There are tons and tons of legal disclosures and steps that I've got to go through, regulatory, all these things are driven by the regulatory system. And yet these are the examples. Like I get this, I get healthcare, I get education. These are examples people use constantly of like unregulated capitalism, unfettered capitalism, people say. And I'm like, this is the worst example you could pick. Like this is far from it. And unsurprisingly, it's kind of stagnant, right? Like these kinds of disruptions have not come very quickly. But I don't know. I'd be curious to see where you guys think that some of that kind of stuff is going. And also, like, do you think the motives of the Redditors matter? Because if they're not actually interested in, like, some of them seem to just be interested in the fun or like the support, like the sport of driving up the price of GameStop. Like, is there anything wrong with that? Do you guys see any issue with that as a reason to get in?
Honestly, I
No,
don't care.
for me, they're putting in the risk as well.
Yeah.
They're risking their own money to buy into the stock. So motivations, I mean, it's whatever. I think I'm more concerned on the continual calls for more and more regulations when, like you just said, this sector of our economy is already heavily regulated and is probably only going to get more so.
Yeah. I mean,
And
I certainly worry about that.
we've been
Yeah.
saying forever that good intentions don't matter if the outcomes are bad. So by that same token, bad intentions don't matter if the outcomes are good. Like,
Yeah.
like I fully intend to put solar panels on my house so that my electricity bill is going to be lower, not necessarily to save the environment, but if the outcome is the same, then what does it matter?
Yeah, I think, well, and especially in the context of like, is this a voluntary, transactionally, is this voluntary or not, right? And are you engaging in something because you chose to or because somebody forced you to? It seems very clear to me that like the overwhelming majority of the Redditors are not being forced by anybody to do this. They thought it would be fun. They thought it'd be fun. B, they seem to think, and again, this is not a monolithic block either. I mean, there's people who are, getting in or out for a million different reasons, but like some just want to stick it to Melvin Capital, or just want to stick it to like the short sellers or whatever. Which, again, to be fair, if you think about the way that people tend to behave anyway, I mean, like, again, like the short sellers are literally banking on GameStop going out of business. Well, unsurprisingly, there's a lot of people on Reddit who have fond memories of GameStop from being a kid, being a gamer as a kid, wanting to, show up, which is, I think is kind of funny because until like this year, all I've ever seen are GameStop memes about GameStop, like ripping people off for, used games and stuff like that. Like GameStop memes that say like, oh, here's a, first edition Witcher or whatever, like Witcher 1, that'll be 1 cent or whatever. We'll buy it from you for a cent. And that's been kind of the memes that I've always seen with GameStop, but who knows, right? Like now people in the battle of GameStop versus, faceless Wall Street tycoon, I guess GameStop comes out ahead. Right. But I don't know. I think the whole thing is like, it's such a bizarre thing to watch. On the other hand, there are a million reasons why a short couldn't, maybe doesn't go the way that you think, right? Like some outside venture capital firm could come in and save the company last minute and boost the stock. Like Elon Musk could have bought GameStop and then suddenly the stock price could have turned around for that reason, and, you'd have the same problem with short sellers, right? But I think it's really interesting that the minute that kind of normal people get involved and are the ones who are kind of driving the change in the stock price, that's when we get huge calls for regulation, huge calls for, Robinhood stopping the trades, like all that kind of stuff. And it's not just Robinhood, but it was all the, most of the kind of retail trading, like day trading kind of platforms, whatever. But it just feels like it's the moments like that where I just totally get why people get pissed about this stuff. Like I get why they don't like, or they have a bad taste in their mouth about finance, and that, sort of then applies to capitalism as a result. It's just unfortunate that like it's not actually a really good example of capitalism in that sense, or at least their understanding of it is not a very good example, because like it's equally an example of capitalism, and maybe even a better one of Redditors coming in and buying the stock to change the fate of the stock price. Like that's how, in my world, that's how it should work. It should be fine for individuals to participate. Like that's sort of the whole point that Fee has made for 75 years now is that like everybody should be playing by the same rules, and those rules should be economic freedom, and you should be able to trade and own property and everything else, but like they should apply evenly. It shouldn't be just for rich people, just for Wall Streeters. It should be for anybody who wants to participate.
And then one good thing that is coming out of this is that another stock that was bought up by Reddit was AMC, and AMC had the foresight to get equity from their higher stock price and staved off death, bankruptcy. About a month and a half ago, they were saying they weren't going to have enough money to cover like 2 months or something like that. Yeah. And with the Wall Street bets coming in and buying up the stock to stick it to the hedge funds, they might have saved the movie going experience. So,
is so
good outcomes. It's just very interesting, and it's kind of like, oh, GameStop is like screwed anyways. Like, what are they going to do to change their business model? But a company like AMC, which out of no control of their own, were basically shut down, were able to use this to stay alive and to save how many thousands of jobs, and it's just something you don't think about, because Wall Street is usually pretty disconnected from Main Street. God, I hate that. I hate Wall Street versus Main Street. I hate it. But it's there's a very big disconnect in the thought process, and that example really drives home how it can affect both.
I think part of that whole disconnect is interesting, because it's like it's been harped on in movies since Wall Street, right? Like since that movie, where like part of the whole villainy of that movie is Martin Sheen, making these take, what is it, an airplane company, or I forget exactly what the guy's company was, but like the whole idea of it was like to take a company, to buy it, and then quote unquote sell it for parts, or what I don't even know what that means half the time anyway. I mean, people use that kind of that kind of language all the time, but the reality is, and this is the harsh, this is sort of the harsh reality of it, is a company like GameStop that has for years had a business model that is not functioning very well, kind of probably needs the feedback from investors that it's not worth investing anymore, right? Like there's a valuable function in play here, but also like nostalgia is real, right? Like people care about the brands and the like the companies that they grew up with and that they spend a lot of time with and they have good memories of and whatever. So you can't really separate all of these things out. Like they're just because like there's an on paper aspect of this that's not working does not necessarily mean that there aren't like intangible aspects of a company that are worth saving. And I think the market is telling us both of those things about GameStop right now, right? Like I think the kind of the big Wall Street investor class is saying this company's model is broken, and I think we all know that also. Like the model is broken, it's not functioning. But then there's also a groundswell of other people who are sitting here saying, okay, fine, maybe the model's not broken, but I love the essence of this somehow. So there's going to have to be some kind of a balance, finding like what is actually worth saving about this versus, what's just a stick it to the Wall Street fat cats quality to it, and that is where it gets tricky to sort of assess what the meaning of all of this is. But it's pretty interesting. I mean, it's certainly not something I expected to watch this, this week.
And that's definitely a good outcome of this, is that it's opening up more and more people's eyes to that they can be involved in the stock market and actually hopefully make some money and invest long term. And I mean, just the numbers of the Wall Street Bets Reddit have just skyrocketed, obviously, but that's a good thing. More people involved in the stock market is a good thing.
Wall Street Bets Facebook group was booted off of Facebook, was shut down. I think Reddit. I forget I forget all of the different things that have happened in the last few days. But a lot of our social media platforms, it's exactly what I'm talking about in the most recent Out of Frame episode. But it's like all of the social media giants are now also kind of cracking down on Reddit, cracking down on Wall Street Bets. And I'm sure that there are other groups, that are talking about GME and all this kind of stuff that are being removed from these platforms. Just this is where I think we go into this territory where I start to understand and really get why people are upset about some of these things. Because if it feels like, because to your point, Paul, it's good for people to feel like they can get into stock trading and all that kind of stuff. But I think it's equally important for everybody to understand that stock trading is a risky endeavor, and it can also mean you lose all of your money or you lose whatever money you put in, because nobody actually does know the future of these things. And we're looking at lots and lots of possibilities because there's millions of people involved, right? But when you see a world where the downside risks apply to you, the individual putting in, $200, but they don't apply to a hedge fund that's, worth billions, that starts to feel, not just feel, it literally is an inequality that we should be concerned about, right? Because it's clearly an inequality driven by coercion, by the state saying, you're too big to fail, but you're not. You like the retail investor, you can fail all day long, but Bear Stearns, nope, can't allow that to happen. We'll bail them out. So when you start seeing the government bail out the losses of big firms, but not bailing out the little guy, and frankly, this is the backwards way to look at it, right? The correct way to look at it really is nobody gets bailed out. Little guys don't get bailed out. Big firms don't get bailed out. Nobody gets bailed out, because that's the losses part of profits and losses. Like that's the important aspect of this. It concerns me a lot when I see, that happen in the financial sector, and then have the groups that were participating in all this stuff shut down by social media. Man, this is again right where I am super worried about social media controlling what people are allowed to say and talk about and all that kind of stuff. Just it's really disconcerting to me.
Yeah, certainly, but they couldn't stop it. That's the good thing. Like even with all of this like these billion-dollar hedge funds, Facebook, Twitter, reporters everywhere, CNBC literally going on and on about how these people are evil, and QAnon and all that stuff, like still couldn't stop this I don't want to call it a movement, but movement to do this. And you look through, so I follow a lot of interesting meme pages on Instagram, and this is all they're talking about. What was that?
I said the memes have been fire.
The memes from this have been phenomenal, for sure.
So, they all, but it's everywhere. Like this is what's the good thing about social media, and even though you try to crack down on it, this is what you see time and time again. Just every time you try to prohibit something, if there's a market for it, it's gonna happen. So, more and more people are coming to this conclusion. Hopefully, the right conclusion, just keep government out. But it's interesting when typically with the bailouts in 2008. Sorry, real quickly, in 2008, when all this stuff was before times of social media, basically, none of this could have happened. It would have been smothered in the cradle. None of this even could have come close to happening. But with the development of the internet and the democratization that the internet provides and has given us, because the government has stayed out, we get moments like these. And I don't know. I mean, maybe the government could do whatever. They'll probably bail out. But if the housing crisis, it'd be a lot harder to justify a bailout after what we've seen. Doesn't mean they won't, but
You know,
I just don't think it can happen quite as easily again.
I agree. I think it'll be harder because I think there will be more public backlash. I do think it's interesting. I don't know if you're aware of this, but Michael Burry, who famously was played by Christian Bale in The Big Short, and who was one of the first people to identify the 2007 financial crisis and the shorts that were happening there. He was one of the first people to identify those shorts weren't going to be able to be covered. Like the losses from those shorts weren't going to be able to be covered by the the companies that invested. And he was actually part of this whole endeavor. He was part of the GameStop fiasco. I don't know exactly what his role in all of this was, but you just made me think of something, Paul, which is that like Michael Burry, he's fantastic on Twitter, first of all, but which I say, take this with a grain of salt, as I generally hate Twitter, but he's all over Twitter, and he's been pretty prominent for the last few years. He kind of like disappeared for a little while and then kind of came back like at the beginning of last year, and and he's in and really engaged in a lot of this kind of stuff right now. But like he can do that now, whereas when he was in in 2007, like he did not have an outlet. Like I'm pretty sure Michael Burry would have been screaming from the rooftops everywhere he possibly could on social media if he had the power in 2007, right? Like I'm pretty sure he would have been warning anybody who would listen that the housing market was about to collapse, because he was doing it internally. Like he was doing it in among his clients, and then it was his whole short position. Like that's the whole thing with like Burry actually shorted the housing market, right? And he was correct, which is insane. And that was the whole point of the whole thing, was that like he took these immense downside risks, and positioned himself in a way that could have lost people billions and billions of dollars, because he had looked at the financials and expected the housing market to collapse, and he was right. That's a big risk to take, so if there's anybody who knows how dangerous those kinds of risks are, I'm sure it's him. But at the same time, like it's amusing to me that he was engaged in this whole GME thing. But I don't know, man. It's oh yeah, said I'm looking at the news here. It's a Big Short investor Michael Burry made a 1,500% gain on GME stock. So sometimes people are savvy. I don't know, who knows? But it's a weird world that we're living in, man. And I agree with you that there are like Facebook or Reddit or whomever can try to shut these guys down, but like people are going to find places to talk. They're always going to find places to talk. So I don't think you can put that cat back in the bag at this point. But at the same time, it bothers me that they're trying. It's upsetting to me that, and honestly, I think it makes things worse, because it does play. And I've said this in Out of Frame episodes before too. It just plays into conspiracy theories. It plays into the idea that there are people out to get you, and that your ideas and the things you want to talk about are so dangerous that Facebook will shut you down. And it's hard to argue that when Facebook is trying to shut you down. Like it's not. Facebook doesn't have a very good, leg to stand on when they are actively trying to stop people from talking about stuff. So, I don't know, dude. It is weird. Have you guys made any big bets on GME, or are you staying out of the stock game, the stonk game?
Dogecoin treated me well. Rode the Doge to the moon, and so now I'm gonna go buy a milkshake or something. So
I feel like I should have done that, because my dog is a Shiba, and he is a Doge.
Yeah. You have a Doge,
and I have no Doge coins, none of it. Jen?
No, I haven't I haven't gotten in on the action, not because I don't want to, but because the process of moving uh, is just a lot like just lighting $100 bills on fire, just anyway.
Yeah,
So,
boy, isn't
maybe,
it?
maybe I'm going to take a break and not spend any money for a little while.
Yeah. I, having just and am continuing to uh, engage in that very process, but not for me. Boy, do I feel that. Holy cow. If you think it feels like lighting $100 bills on fire for you to move, wait until you move somebody else. Oh boy,
Yeah.
it is. Yeah, it's a lot. But man, I think that's probably about where we'll wrap it up. You guys have any sort of final thoughts on the GME situation? Jen, I'll start with you.
I am 1,000% here for it. I think this is fantastic. I want more people involved in the financial markets. I want more people thinking critically about what markets are and what markets do and what they should do and what they shouldn't do. And I think this is fantastic. And I don't particularly care if Wall Street Bets is doing this for the gains, for the feels, or for the lulls. It all comes out the same. So I am having a blast just watching all of this happen. Like I said, I'm not invested in any of these stocks right now. Like I'm not playing this game myself with my own money. So I have no dog in the fight. I'm just watching it all unfold, and it is beautiful.
Nice. Paul?
Wall Street Bets has made Occupy Wall Street movement look like child's play. They've done what they tried to do unsuccessfully. Occupy Wall Street was pretty funny though. But Wall Street Bets, they're doing it. Like it's just they are taking they're playing the game and beating them at it, and at the same time highlighting the issues with the market and the financial regulations and I think where we come in is educating people why the system is built like this. Why is Dodd-Frank so bad and still, hurting? It was passed in 2010. 11 years later, it's still having impacts that we're feeling today, and has played a role in this situation. So, just continue to educate people that this is not like just unfettered free market capitalism. So, I agree with Jen all 100%. Their Wall Street Bets motives, I don't care. It's their money. So as long as nobody's pointing a gun at their head to buy more stonks, then, they can do what they want.
So yeah, you know what? I agree with all that. I think I would just add to it that, like, if you are thinking about this and you are thinking about how, at least how it seems to be incredibly unfair, the difference in treatment that companies like Melvin Capital get versus versus your everyday Wall Street Bets member, right? Or I don't, Reddit doesn't really have members in that sense, but you know what I mean, like your retail investors. I guess the one thing that I would say is, if you're interested in that, and if you're interested in making it more equitable and more fair, make sure you don't do it by demanding the government get more and more involved, because the government will. And I made this point in the social media, out of frame, but like the more you get the government involved, the more it's going to get involved for the benefit of the big players. That's always been the case. It's never really not going to be the case for all sorts of reasons that I don't really want to go into right now. But the only way to fix this really is to make companies like Melvin Capital responsible for their bets. Like, that's the only way to deal with this, is if they are going to capitalize on the upside of all these things, then they have to pay the piper when it comes to the downsides. So I guess that would be my only sort of final concluding thought is, if you are interested in policy changes around this, make sure those policy changes are designed to make the playing field actually level, and not to get the government more and more power to decide who can or who can't, or who's going to get bailed out or who's not going to get bailed out. The answer should be nobody gets bailed out, right? That should be the answer. Otherwise, we end up with these kinds of things perpetuating again and again and again. So I guess that's where I would conclude. So thank you guys. Again, I want a little bit of sort of final housekeeping. Again, there's no bonus section. So if you're a supporter of the show on Patreon, that's patreon.com/outoframeshow, or Subscribestar, which is the same, subscribestar.com/outoframeshow. We would love for your support. Normally, every time we do a podcast episode, we do bonus content for our patrons and Subscribestar supporters. Either way, if you're a member of, actually, if you're anybody, you can join us on Discord. You can find that link through the YouTube channel. I think it might be, we'll link it in the description on this video and in the description of our podcasts. You can, of course, listen to the podcast anywhere you normally listen to the podcasts. But please also give us a rating. If you're on, Apple Podcasts or Google, shoot us a rating, because we would love to, get seen in more people's feeds and more people's search recommendations and stuff like that. If you're a fan of the show, that would really help us out. But either way, thank you guys so much for listening and for supporting the show. And we will see you next time.